I recently got a great question from a taxpayer about whether they were still eligible to make a contribution to their Roth IRA for 2024 now that we're a month into 2025. And this taxpayer had done a little bit of research on their own, which I appreciate, but they understandably got a little bit confused because when they went to the good old Google and said, hey, can I contribute to a Roth IRA? They got what they felt was conflicting information because they were seeing one threshold related to modified adjusted gross income, or MAGI, and they saw another threshold related to earned income. And so they reached out and said, hey, how do I navigate this? So I wanted to do a quick video explaining how this works. Please remember that you need to apply this to your specific situation. Probably makes sense to talk to a qualified professional before you take action. But in general, from a high level, we have until we file our next year's tax return or last year's tax return, our next tax return that we need to file. So I'm recording this at the beginning of 2025. So as we look at our 2024 tax return, we have up until we file the tax return, or April 15th, whichever comes earlier, to finish out contributing to some qualified accounts for 2024, Roth IRA being one of them. Now, when we look at earned income, this is an important threshold to keep in mind because the Roth IRA contribution limit is $7,000 per year or up to our earned income. So if we have more than $7,000, we stop at that $7,000. Unless we're over the age of 50, then we have an additional $1,000 catch up that we can make. So that's the earned income side. It's the amount we can contribute is the lower of earned income, or that $7,000. And that contribution limit, we're talking about Roth IRAs here, but that's the same $7,000 for traditional IRAs or Roth IRAs. So we can't separately contribute $7,000 to both. Now, when we look at the modified adjusted gross income side of this equation, that doesn't affect directly how much we are able to contribute, but whether we're able to contribute to a Roth IRA at all. There's a little bit of a phase out that we'll talk about in just a second. This is an area where I don't try to commit the numbers to memory. I have a tax guide that I keep on my desk so that I can look at that and say, okay, for 2024, if I'm single, if I have modified adjusted gross income less than $146,000, I can contribute up to my earned income, or that $7,000. And then that phase out range is between $146,000 and $161,000 for a single filer. Over $161,000, I cannot contribute to a Roth in the conventional way. Then we have to get into backdoor Roth contributions, which is a whole separate conversation. If I'm married filing jointly, that threshold moves up to $230,000 on the low end of the range and $240,000 on the high end of the range. And of course, those ranges all shift a little bit higher for 2025. So if I'm considering making a Roth contribution for 2024, last year, I need to make sure I know what my modified adjusted gross income is, and I need to know what my earned income is. And you might think, well, hey, $7,000, if I'm talking about both a $7,000 earned income threshold as well as a $230,000 modified adjusted gross income level, why would these be coming into the same conversation? It's a good question, but the taxpayer who reached out to me found themselves in a unique situation where they had been laid off and taken a sabbatical in 2024. And so they had very little earned income, less than $7,000, but they had income from other sources that did not count as earned income. And so they found themselves in the situation where they could contribute to Roth at a very low effective tax rate. Now, if you're not familiar with how the IRS defines earned income, definitely that's one to check in on and make sure you're getting correct. But from a really high level, for most people, earned income is either going to be W-2 wages that are coming through on line one of the tax return, or this is going to come from self-employment income, whether that's a sole proprietorship, a partnership, an S corp. Typically, we have to be actively doing something. This is employment, whether we're self-employed or employed by someone else. So most lines on the tax return, if we just go line by line, do not count as earned income. And that is a very important criteria. The one kind of nuance or caveat to needing earned income is that for a married couple filing jointly, the IRS does not distinguish between the two individuals as to who had the earned income. So if my spouse earns all the income in our marriage, but we file jointly, I don't have to technically have any earned income to still make a Roth or traditional IRA contribution in my name. As long as a couple, we have earned income that exceeds that contribution limit, we still get up to the max. So definitely some different criteria, some different definitions we need to keep in mind here. But as I record this at the beginning of February, we still have some time. If we want to go back and finish making contributions for 2024, we're able to do that. We just need to make sure we navigate it correctly to avoid any issues or penalties that might come from over contributing or contributing to an account that we weren't eligible for. Happy tax planning.